So in this video, I'm going to cover selling your meme coin token after you've done a trade and you're ready to sell part of your position or your whole position. You're probably wondering, like, why do we need to even do a video on that? You just go into your wallet or your bot, whatever, and just click the sell button, right? Not that simple. I mean, it is that simple, but the way you sell the token makes a massive difference. When it comes to meme coin trading, very likely, if you're looking to do this and make a lot of profit over an extended period of time, you're going to be placing a lot of trades. And I'm going to show you why the way you sell is so key. So I've just sorted, I'm in new pairs here and I've sorted it by age. So let's just go on the one that's the newest, which is this VCAT stuff. And you can see we're on a 1 minute chart. Let me just hide this sidebar. You just click here on hide sidebar after you click 3 buttons and you've just got the clear chart there. Now, chart looks nothing interesting. We're going to obviously switch it to market cap as we usually do. And there's no socials or anything. So I doubt this is going to go anywhere unless there is something there in the background that I've not checked. But obviously, I've not fully researched this, which is kind of fair enough. And now looking at the price action, go on to a 1 second one. And here, this is the point I want to illustrate. This is a 1 second chart. Notice in a second, when you're placing your transaction, maybe to sell here, a few seconds later, 1, 2, 3, maybe like 10, 15 seconds later, the price is 24K. 10, 12K to 24K. Or you're looking to buy and you've just bought and the price is 26K, where literally a second or 5 seconds later, the price is 13K. This is literally seconds. Look at the time thing on the stamp on the bottom, 47.42, 47.53. 7 seconds and you could have got the token for half price. That's crazy. And again, I'm sharing stuff with you that a lot of people just don't know about, and you won't have learned this or heard about this anywhere else online, more than likely not. That's why you're here on the training. So what do we do with this? When you're coming to sell, it doesn't matter what token you're in, jump on a 1 second, especially if it's a collection that's otherwise settled, you're otherwise in profit and stuff. Just hold your horses, because literally, if you watching this, it could be a difference between here's literally a 2x in terms of where you're buying and where you're selling. And if you just do it blind, you'll just be buying tops all the time and selling bottoms and you won't even know. And it really damages your account doing that. It really damages your account buying up here, even though you could have bought here. Because if you bought down here and it looks like, the collection's not very good, fair enough, and you might sell here, you're actually still walking away with a profit. You might have done that by luck a few times. And then a few times you may have bought and sold and be like, why am I down? I look like I bought around here and I sold around here. I should be break even. Why am I way down 20% on my position? Well, it's because you're not watching closely enough the volatility in price, especially in a wave 1, the early stage move, massive volatility. So here, what do you do then? So I would be watching this. Let's say I'm in it right now and I bought around 15,000 and I'm watching it. So what I would do is watch price, make sure it's not dumping completely suddenly. Now, yes, I've explained in other videos, we get a lot of pumping and dumping in prices, especially wave 1. Things can go down rapidly, but they go down usually over a period of 20 minutes to an hour or two, not within 20 seconds. It's very rare it goes that quick. So what I would do is literally watch the charts on a second, watch the buys come in. Any green candles at the bottom are very likely to be buys and red to be sells, because in a second, it's very hard for anybody to have not bought or sold. And literally I would sell now. Something like now. You see how somebody's just sold as soon as the movement went up? Because they're probably doing what I do. They watch it for a better price. Price could keep pumping and stuff. We don't know. But you want to sell into a pump to make profit. You want to sell into a pump. Where do you want to buy? You want to buy into a dump. Because the dump could be literally 28,000 we got to there. And now the price is 21,000 or it'd be 18,000. So you literally buying 30% discount if you wait a second or two for a quick dump. Or if the price is going too far ahead, just leave it, let it go. Or again, like I said, wait for a pullback. Green candles are buys, red candles are sells, and that gives us a better idea. But mainly it's the chart you're looking at. So even here, so let's say we've sold now. Let's say we're looking to get back in. Right now, I'm just looking left the last couple of minutes or so, and I can see we're already at the highs. We're going to get a bit of a pullback or a dump. We've had a dump. Maybe I buy there. And that's still a better entry than 28,000. This was an entry somebody bought quickly at 19,000 as soon as somebody sold. And that's what people do. The smarter people, what they do is they wait for a big buy or sell before they jump in, because that big sell moves the price down quickly. And you can see it registered here. That $59 sell wasn't that big. But if you scroll down, you'll see this 189 sell, that's bigger amount in terms of dollars, that pushed the price down. And that makes it cheaper in terms of entry. So now at least you entered at 18 and you can watch the price and you can see what happens. But at least you didn't enter at 28. So even if you think it's going sideways, really you're already selling for a loss. Look, we're having another dump here and it's probably some heavy selling. Yeah, a £635 sell. But notice very quickly we got some buy orders in because people are watching that. I would buy now. I'd literally click buy now because you're buying it at 17k. I'm not saying I would buy the collection. I'm just saying I would wait for the opportune moment. These little things, you miss these little things. This is what eats away at your account, your trading account. So very, very important video. When you're buying and selling, drop to a second and get a good entry or a good exit depending on whether you're buying or selling. Thanks for listening. In this video, I'm going to talk about target prices. And what we're going to do is we're going to actually discuss an example I was just talking about in the previous video, actually, because after the video, I actually traded this because they showed their socials on here and I could see that price was accumulating here. So in another video, you would have seen me talk about this strategy. Let me just hide this sidebar. The strategy is basically when you see price kind of consolidating around a particular area, as you're seeing here, then very likely, more often than not, it's going to break through. Now, you have to be careful with collections like this because it's so early and it's so new and it's only a few minutes in. And remember, most of the time, the volume kind of dies down. But this volume was holding up. They added socials, which is bullish again. Socials are okay, nothing that interesting. But basically, it's a vibing cat, which is a well-known meme for a cat. But anyway, my point being, on the 1 second chart, I was seeing price consolidating, but the main thing you can see on the 1 second chart, what I was seeing, as I was actually making the last video, I could see price going up and down and it wasn't doing anything. But then I saw what looked like an ascending triangle. So basically, if we draw a line on the top here, we were getting higher lows. This is called an ascending triangle. Very bullish. It usually means price will break out. Might not go very far, but it means it will break out. So what did I do? I did exactly what I said in the previous video. So I was waiting for these little pullbacks and I got in not perfectly at one of these bottoms. I got in just a little bit lower. So I think my entry price was 18 something. And I was in here and then I was waiting. And then I could see it ascending. So I was like, yeah, this is definitely going to break out. But here are a few things I do, which you can do as well. When you find out what your entry price is, you can actually see it underneath. If you find your wallet underneath, you can find out the exact price. So what I did was I marked off my entry price. And sometimes on a chart, that's good because you kind of know where you got in. So it's a good idea to do that, kind of good practice. Otherwise, you're just shooting, the breeze, like you just have no clue what's going on. Where's my target? So this is not really a target because this is where I think it's going to break through. But if price is really struggling, I can always take a little bit of profit here and walk off. But my main target is round numbers, as I've explained before, but also where was the previous high? So in any collection, when it first hit a high early on, that should be your target. And when the price got there, I usually sell 50%, but because this collection, like they have no Twitter follows or anything, it doesn't look very interesting apart from the fact that it's a well-known meme. It's otherwise not a great Twitter account or anything. So it's kind of fresh, no real following or anything. So I wasn't that keen longer term on it. So I took some profits and that's okay. You make a 50%, or actually it wasn't anywhere near a 2x. It was more like 40 or 50% because suddenly people were doing the same thing I was doing. And then in that little bit of a sell-off, I wasn't quite fast enough. So only 50%, but still it's, every little helps. And price has been moving up since. But if I had sold 50%, it was only a small position, but if I sold 50%, I would usually let 50 run just to see what happens. And notice here at this level, that would be my next level, which is a round number 50,000. What are we seeing at 50,000? A lot of consolidating, price struggling. However, it's the chance it could break out again because, again, we're getting that little ascending wedge pattern. And look, live, it has broken out, which is fair enough. But this could get to another level and then sell off quite rapidly because that's what these collections do, unfortunately, especially early on if they can't sustain anything. And like I said, this is not any kind of new, interesting meme. It's a well-known meme and stuff like that. So it's probably not going to go very far. Anyway, I hope these pointers help you. Thanks. In this video, I'm going to discuss trading size. This is a very important video, which is why I've labeled it important. Because whether you're experienced with meme coin investing and trading or brand new, this is a common mistake new people make. I made this when I first started any type of trading, especially when you jump into something new. You see, a couple of trades work, go in your favor, and you think, well, let me just double up the position and see how that goes. I'll just make my money faster. Massive, massive mistake. So many things could go wrong with this, and it's really important you protect your trading account. So let's say you've got 1K and you're like, I want to use my 1K. I've got other crypto investments and stuff, but I want to use 1K to invest in meme coins. So literally we'll use round figures. And let's say we're doing Solana meme coins. So you've got $1,000 in Solana and you've already put it inside your Phantom wallet. So it's basically ready to go. You can connect that onto Radium or use a bot, and you can start trading in Solana meme coins. Now, when you're brand new, if you're watching this and you're brand new, I don't care how much money you have, you're not going to be buying more than maximum $5. Because you need to just get the experience of buying and selling, seeing price move up and down, and then take it from there. Even if your 5 turns into 50 and you're like, man, that was a 10x there, whatever, I'd put in all 1,000 and I would have made 10,000, it doesn't matter. Life's not that kind, unfortunately. You will put 5 and 5 and 5 and 5 and be doing that for a few days until you get the hang of it. Because trust me, some of these you're going to lose 90% on this, some of these trades, because you don't know what you're doing yet. And that's okay. You have to humble yourself and start really small. And the thing is, when you start really small, there'll be no emotions. The problem is with larger numbers, let's say you take 1,000, a lot of people do this, that let me just do 500. Like, what the hell is 1,000 going to do? Let me do a 500, just see how it goes. And the collection seemed to be going okay and the chart was going up, and then suddenly, you know what, just a couple of big sells. And suddenly you're down 50%. What are you going to do with your 500? You're not going to sell it. Most people won't. They'll hold and hope. And I'm sure it's happened to you before in any type of investing. It's a dangerous position because you've made a massive error there, but you're so emotionally invested with the amount you put in that you're willing to hold the loss, even though that's not the wise thing to do here. And you don't want to regret it in case it suddenly turns and goes up. So you just keep holding, and then maybe it goes up a bit, down a bit, but then it just slowly keeps going down because, as I've shown you in another video, most new launches will have that pump and dump cycle chart, that pump and dump chart. So you're in trouble. And then you finally lose your wits. You start complaining in the telegrams. You're asking people why they're cheating and why is everybody selling and where's the dev? Like, where the hell has he gone? Like, he needs to pump my bags however he can. Like, come on, dev, stop being annoying. And when you start doing that stuff, you're too emotionally invested, and then you're in trouble. And then eventually you just give up hope and you sell it for $50 and you've lost most of it. So now you're left with $550 in your account. You do one or more of those trades and then that's your account gone. Simple as that. And you hadn't even given yourself a chance to learn. But if you start with small amounts that don't cause emotion, then even when you're in profit, you're not going to quickly sell. Because if you're in profit and it goes to 10, you're not going to be like, oh, I need to quickly sell here. Because if it was 500 going to 1,000, you'll be more emotionally thinking, I need to sell. Even though there's nothing wrong with the collection. It's looking really good. The numbers are looking good. The chart's looking healthy. More and more people into Telegram. There's no suspicions or scams involved in this. That as far as you can see, it's a really good meme as well. It makes more sense to hold there. But you're not holding because the number you invested in was too high. You need to start smaller. Start with 5 and build up. Even if you're experienced, but you're learning this from the first time, and this whole training is blowing your mind. That's a good thing. I'm happy about that. But what that means is a lot of this stuff you did not know. So you're starting pretty much from afresh. Start small, build up. And when you can prove with these little investments that, in total during the day, it's a lot. Still, if you add all the 5s up, in the whole day, you may have invested $50 or $100. Good thing about Solana, as you know, transaction fees are very, very low. So nothing wrong with buying small amounts. You've done $50 or $100 for the day. That's still a lot of investing. And if you're regularly flipping this into 2x, 200 every day, you're making $100 a day, but you're proving it to yourself. Then maybe you can start building up your position size. But you want to have enough chips at the end of the day as you're learning. This is basically called your learning fee. This is the fee to learn. The fee to learn is taking a few knocks and making a few bits of profit along the way. But again, if you build it up too fast, without learning, without practicing on a lot of collections, you are going to fail. Fail, fail, fail. So I'll repeat again, start small. Start small. Whatever your experience, start small. So when you're more experienced, what do you want to do? So we started small. All right, so you guys are listening. So there's a learning fee you'll have to pay. You'll have to start small. But then what do you do after that? You can increase the size. You can move to 10, 15 or 20 per position. That's the next gradual step up. But then that's the next important thing. You might start using bots. You're using new software for the first time, new blockchains. Whenever you're doing something new, the chance of making a mistake is high. The chance of sticky fingers, heavy fingers, high. You might accidentally click the button that says 10 sol rather than 1 sol, and then you're in trouble. And what's another issue? So there's more. The other issue is the slippage. So when you're placing very big trades, you're going to get overcharged. It's not worth it because by the time the trade goes through, you'll have paid 10% more than you should have. So what's my point there? So even if you're taking a big position, you're very confident, you've been making loads of money on meme coins for a while now, and you want your next trade, you're like, I want to put 500 into this, I'm confident. Split it up. Split it up into at least two 250s, 250 and 250, or 5 times 100. Yes, the price will move up and down and you won't get your perfect entry, but you won't get destroyed with slippage. Because in early collections, and you want to invest a little bit heavily, you're very, very confident, you've seen the same setup so many times before, but the liquidity is only 3k or something, so it's just now starting, it's a brand new collection now starting. Your massive 500 purchase will push it up significantly, and that causes a few problems. One is you'll be overpaying way more than the price you would have paid here. You'd be paying somewhere like 3/4 of the way up that candle. I know that from experience. So it's way more than you should have been paying. And then the other thing, other people who bought here, bots and stuff like that, they're quickly going to sell because they've got a good option to get out. And the price is going to go all the way back down here. And then you're suddenly already holding a significant loss just because you made the mistake of trading a big position. Now, you'll see it all the time. You hear about it on Twitter and stuff. Random new people come into meme coins and they'll suddenly put 10 grand behind something or 5 grand. Madness. And people joke about it in the Telegram and stuff because, look, if you even buy in for that, why don't you split it up? They don't split it up because they don't know. They don't understand all these things. They think it's just like trading Bitcoin or Ethereum or something. It's not. It's very, very different. Liquidity's low. Most collections, nearly all, always the liquidity is low and these newer ones. So you have to respect the low liquidity by doing it slowly. It's almost like you're doing it stealth in a way. You're just slowly buying up because you have the belief something's going to happen. And the other good thing is, if you're buying it up slowly, it gives you time. You can just watch the price a little bit. And if the price is already pumping, maybe you stop at 300 because you've got 300 invested in a good position and you're in good profit. But if you see it dumping more, then you might suddenly stop after buying 200 and be like, well, let me hold on here. Let me not do the whole 500. So just be patient and take your time and understand mistakes are made. There's new technology to learn. There's lots of slippage as well. In no scenario here, I don't care how rich you are, should you be paying 10,000 or 5,000 in a meme coin ever. There's never a scenario that makes sense. You can buy 5,000, but you'll split up the payments, even in a well-established one, to split it up over 1,000 times 5 payments, just so you get in at your good prices and stuff. I've showed you in other videos with slippage how and on 1 second charts, how literally just waiting a few seconds here or there, you could be the difference of getting in for 50% more or less in a price. That's ridiculous. And again, you people don't see that. They'll just go on a normal hour chart or minute chart or 5-minute chart and they randomly start overpaying for things or selling lower than they could have sold for. Massive mistakes to make. But that's why you invested in this training, so you don't do that. So please heed my advice. Listen to it. It's from a lot of experience. Start slow. Start small always and gradually build up from there. And then even when you build up, there's a limit to where you've built up to. You're never going to be placing trades for thousands of dollars on any meme coin. You're always going to split up, even if you have a lot of conviction. Protect your trading account at all costs. Final tip for you. So as you're building up your trading account, because that's the point of this training, so you started with 10 sol, And let's say you've been trading for a week or so and it's going really well and you're at 25 sol and you're like, Sajid, what do I do here? It's going really well. Yes, you can definitely increase your trading size a little bit, but just be careful. There'll be good days and bad days as well, so don't rush. But what do you do with 25 sol? Make sure you don't have all of this cash sitting in your account. A few reasons for this. Number one, just general hacks and risks. It's just normal, good idea, security control, to send 15 of these, or, because you never need more than 10, because I just said you're never going to have these massive positions, and usually you're only going to be involved in 1 or 2 coins. You're not going to be involved in 20. You shouldn't be involved in 20. Otherwise you'll not be able to keep track of what the hell's going on. So send 15 of these to your centralized exchange, put it back in your bank account, get rid of it. That's your profit. Take it away. So you don't get emotionally invested and struggle with other emotional problems. When you have too much money in your account, this is where you can start placing bad trades. Just because you've got more money and you think you're in loads of profit and it's the house money and you can just do whatever you want. Don't do that. Take money out. This is not held as tokens, by the way. I'm assuming you've held it as Solana cash. You've already sold stuff. Take 15 out, get it back to 10. That's a really good thing to do for security reason. It's a good thing to do because of emotional reasons, as I've just discussed as well. And generally, it's good advice to protect your trading size. So it'll mean your trading size remains small. For some of these wallets, you can click the maximum button or the half button, and suddenly you might be investing all 25 sol and you don't even know it. So for the bots as well that you're using, sometimes it's helpful to keep that money on the low side in your wallet. So many reasons for this, many reasons it will actually help you as well. So just keep that in mind. Once you're making profits and stuff, regularly take them out and cash them away. And it gives you an idea actually about how much you're making from meme coins as well, week by week, as we go forward as well. That's it. Thanks for listening. In this video, I'm going to talk about when do you know the trend has actually changed? When is that point where you realize and you're like, actually, no, this doesn't make sense anymore. Let's click again on a random collection and let's talk about that. So here, let's go into market cap. This is a collection, obviously it's struggling now. It's at 26,000 in market cap. Let's zoom out a little bit. Wow, this got all the way up to 600. So yeah, this is a really good example. So let's go into a minute and let's go to the peaks. Obviously this is in hindsight, but even in hindsight, let's talk about a couple of pullbacks it had along the way, just so we can kind of determine. And this is a pullback where we may have thought, look, it's over now. This thing's done. What do we do next? There's a few things to note. The first thing I would say is, once you're in a position and, it's a position you're holding for a little bit longer, more than half an hour, it is useful, absolutely, to check their socials, go on their Telegram, and you make your own judgment about whether this collection may have legs or whether it's a kind of another crappy collection that kind of doing all right, is jumping off another narrative, and that's what's making it popular. This is some really weird Harry Potter, Obama rubbish. Doesn't really look like it is anything. It looks like I don't even know what this is. They've just joined loads and loads of random stuff together into one meme coin. Maybe that's unique because that's different. I don't know. But it does look a little bit silly and not in a good way. Let's have a look at their Twitter profile. And you see here, it's not really got that many followers. Very likely when they launched, they didn't have any followers. Let's just have a look. It's only got 9 posts. Yeah, they had no followers 8 hours ago. Nothing interesting. Here they're just telling you they bothered to pay the $2.99 for Dex Screener. And that's probably only because they started pumping a little bit and they're like, all right. They probably got pressured by the community to actually bother and do that. Moontalk listing paid. Again, that's just a listing site where they get a little bit more promotion if they bother with that one. And yeah, that's kind of it. So nothing really interesting, kind of weird collection. So we know already, step one, it's not going to go very far. We don't know. Might get a little bit more exciting, might hit 1 million or something, but it's not going to go anywhere and it's very likely going to drop down. It's not really going to get any consolidation. So that's fair enough. So as we're trading this, we see it gets to these important psychological levels at 200 and then it drops to 100. And this is on a minute. What you want to see on a minute, even a second one, but more important, a minute one, because you have to zoom out a bit because this collection has been going on for a few hours now. To establish a downtrend, you need to have lower highs and lower lows. In an uptrend, it's a staircase. The high gets higher. The lows get higher. Higher lows, higher highs. On the downtrend, you're just coming down the stairs. Just think of stairs. Lower highs and lower lows. This was the high, this was a high, this was a high, these were the lows, the stair keeps going up. Then you had one step down, and now if we got to here, and then we had another step down that went lower than this one, that's steps going down. That's going down the stairs. That didn't happen that time. So let's remove the drawings. We went back up again, and then we had a higher high, lower high, a higher low. And the stairs kept going up. It's just that this stair was more like a landing, and then we carried on smaller stairs. So this is step 2. When do we see the stairs changing? Here, we had a lower high here, and then we went down again. So we had a lower low. So this is possibly a point where definitely I would have exited a good bit of my position here. But what you'd want to see for this continuation is that's just one step. Let's see if it goes back up and then goes down again, another lower high. But this one didn't. This broke that high. So that can't be a downtrend yet, because the step doesn't work that way. The next step has to be lower. Otherwise, we won't be going down the stairs at all. So that broke the trend there again. So we're still going up. So that's not enough. And then we get to this point here, where now we have a lower high here, and this high is lower than this one. So a lower low, lower high. But do we get the steps? We go down again. We pump back down to 300. But then we make these weak efforts to come back up. When you see the weak effort to come back up, that's nowhere near the previous swing high. Nowhere near the previous corners of these stairs. So here, you could draw a line going all the way here. We're getting nowhere near that point. And then we drop again. And then the next high is even lower. That's stairs going down. That's a bad situation. But you had plenty of time here. All this area for you to get out. This is literally 10:53. I know it doesn't sound like a lot, but in meme coin trading, 20 minutes is a lot. That's plenty of time for you to say, look, this is not looking great right now. And then you need to get the hell out of there. And the thing is, because, a lot of people haven't done my course. It's brand new. A lot of people have never even heard of me. So they won't know this stuff. But there are people there just from blindly trading the hundreds of thousands of meme coins. They will kind of know almost by instinct when it's over. They will all start aping out of the door. And that's what happens here. And they really quickly get out of the door. And this is the problem. You have to be quick when it comes to meme coin trading out of your position. Otherwise, you'll be left holding the bag. You don't want that. If you're following my training program, that should not be happening to you at all. Get out of the position when the stair is established. Yes, you might get some pumps along the way, but generally you should be getting the hell out of there. Now, a little trick for you. We talked about stairs. So what's really cool is if you see the price go down and then go down again, you can wait a few seconds, go on to the second one and just look for a tiny little pump for the next step and then sell. It doesn't look like much, but that tiny little few second pump, that could be the difference between getting a much better exit point. That could be a difference of the market cap being 20 to 25. It doesn't sound like a lot, but that's 25% more of your position you would have. And then it will drop again. So just watch for that, because we're going in steps. Nothing goes in a complete straight line. You still may have a better opportunity, but generally you should be getting the hell out of there. So don't overthink it. Get whatever optimal price you can and then get out. That's it, downtrend established. Now, can they recover from this? Well, here's another way to know if the low has gone too low. Well, basically, corrections along the way, they should be anywhere for meme coins. I've noticed, 20% all the way up to like 50, 60% maximum in an uptrend. So if you click on price range here, this drop here was 50%, 58%. That seems to be the maximum in my experience. If it's any more than that, maybe don't even take it from the 1 wick. Take it from these resistance points here. And you got like 49%. If you take it from the wick, maybe it's 56%. That's still not bad. But once we get to down here, I think it's gone too much. Once you get to 60, 70, 80%, this means it's done, in my opinion. I rarely see collections dump 90% and then suddenly go off to like 1 million, 10 million market cap. The dumps tend to be a lot shallower. So just keep that in mind as well. So that's basically how you see an established downtrend. Those kind of 2 or 3 steps you need to look for. Check the socials anyway so you know what to expect. Look to see stairs to see if we're breaking structure, and then also just see how far back some of the other pullbacks were. You don't need to do that. I'm just telling you that generally, if we were still going up, these pullbacks should only be like 30, 40, 50%. They shouldn't be nearly 90%. That's when you know we're done. And this one's clearly done. But even then, when we're done, just in case you missed it and you went off somewhere, you still get these odd pumps. You should be selling into these pumps. These are just called dead cat bounces. They're literally going nowhere. It's just because people oversold the collection so much that you get a little bit of a relief rally. You can take advantage of that. I wouldn't advise to jump in for a trading opportunity, although that is one of our strategies. We've done it before because you can get good multiples even on that. It's just it gets a little bit risky there because you're trading against the trend, not with the trend. When the trend's up, this is a clear uptrend. Any pullbacks, your trend might save you. So even if you got a bad entry, you bought one of the tops here, the trend will save you because it's still going up. But on a downtrend, the trend's not going to save you because basically the pressure of the market is down against you. It's like you're rolling a ball up a hill, a big rock up a hill. The pressure is always going to be down. It's going to get sold off any second. So you better get in and get out quickly if you want to do one of these recovery trades. Thanks for listening. In this video, I'll give you a general overview of the training program. Now, it's very difficult when it comes to trading meme coins to know where to start. There's so many things you need to learn. So let's go through a few of the things you need to learn. First of all, with meme coins, you need to understand exactly what they are. You need to understand how virality occurs when it comes to meme coins. How do they get spread? How do meme coins pump? How do they increase their social followers? So all of the community following, you need to understand how that works. Then you need to understand basics of getting crypto into wallets so you can actually purchase meme coins. So crypto wallets, you need to understand how those work on all of the different blockchains. Then you need to understand how to analyze. So how do you know when it's a good time to buy or sell a meme coin? How do you know the perfect entry and exit prices? How do you know how much of your trading budget you should put towards each meme coin? How do you know how long you should hold the trade? How do you know when you should take profits? All of these things I cover in this comprehensive training, and I cover in a lot of depth. And the next thing you need to know is liquidity pools. What are they? How do they work? Why are they important? How do we avoid scams and rugs? How do we avoid all of these things as we go through? So how do we make sure the collection is safe for us to trade? And then when we're actually trading, how do we trade fast? How do we snipe? How do we use bots to help us get faster trades and get ahead of everybody else? How do we do that? I'm going to show you all of that. And then finally, what are the best trade setups that I use repeatedly? That's going to be the last section of this training, and that's called the playbook. And that's the most important section. And it's very difficult for me to know which order to teach you this in, because when I was learning, I would obviously I've been trading for a very, very long time before this as well. So I brought a lot of my trading skills into this particular niche, but I had to learn everything almost at the same time. So the way I've organized it, I've explained meme coins early on, and then we talk about wallets and wallet kind of setup as well. Then we go to analysis. We discuss how to pick up followers, how to monitor, how to read Telegram groups, stuff like that. And then further down into the course, we discuss general analysis tips, but then we get a little bit more specific. I start showing you how to set up bots and how to snipe. And then we look at the pools as well, so you fully understand this. And then we slowly come towards the playbook, which is my wave 1, wave 2, and wave 3 strategies. And you don't technically need to go through the entire program to be able to trade, but it really does help if you go through it once and have a good idea and everything. Even if some of it didn't register with you, it makes sense. Just skim it, and maybe some of it you'll remember, some you won't. But then you can slowly start coming back to areas where you're not sure. You can come back to the bot tutorials, or if you then want to trade on Solana, but then you want to go to Injective or you want to go to Avalanche, you can come back to the wallet tutorials. If you're not sure your analysis is right or your trade setup's not right, you can come back to the analysis sections, where we also discuss trading psychology as well, because that's very important. So like I said, it's not in any particular order. It's just the order in which I think it might be best for you to learn. And really, you need to understand meme coins. Even if you've been trading meme coins for a while, you should still watch that video, because you'll be surprised how narratives work and suddenly take off. And if you can understand this stuff, then you might miss the first meme in a narrative that pops off. You've missed that one, no problem. But the secondary ones that are related to that launch the day or two after, you'll be all over those and you'll be fully ready. And you know there's going to be volume in those because of the narrative. Again, this might not be making much sense to you now, but don't worry. But the most important one I come back to is the playbook. These are literally the strategies you will use to make consistent profits when it comes to meme coin trading. And I wouldn't call it easy or anything. There's a lot to learn. It is difficult to understand the concepts, but honestly, once you get it, actually kind of isn't that hard, believe it or not, because I think it's probably because a lot of people just don't know about it. But some of the setups you see on some of the charts, they do seem easy once you see the same thing again and again. And then you can load up slightly bigger positions in these as well, always managing your risk, of course. So that's it for this one. We're going to start with understanding memes and take it from there. Thanks. In this video, I'm going to talk about another technical analysis indicator that I use. Now, I have a lot of experience analyzing markets outside of cryptocurrency even, so stock markets, forex and stuff like that. So I already know about a lot of different technical indicators. One thing I noticed with meme coins is a lot of them don't really work as well because we're talking about very low liquidity. A few buys or sells could really move a market. Some of these coins have only literally just launched seconds or minutes ago. So it's not really the same. However, once a listing becomes established, a meme coin becomes more established, then it works a little bit better. But there are definitely a few that I find very useful. Now, some that I've already discussed here are the volume bars, which you already know about, looking at the transactions below to get an idea of any big buys, sells, purchases. Looking at liquidity, you already know about. Some of the trend lines as well, so horizontal support, psychological levels. We've talked about breaking trends, stuff like that. One we haven't really discussed, and it's the only momentum oscillator I find useful. It's called the RSI. So I'll explain it to you right now. Basically, with the RSI, it's a momentum oscillator. You don't need to lose sleep over exactly what this means. Basically, it just gives us an idea of the strength of our market, the momentum of our market, whether it's positive or negative. And there's another one called the MACD as well, which I've not found useful at all with meme coins. But the RSI kind of tells us where things might be a little bit too hot in the market, too overbought or too oversold, because the momentum is pushing too much one way. And sometimes that gives us opportunities. So between these purple lines, anything above the top line is overbought. Let me just see if I can mark it on here. So anything above this line is overbought. Anything above this line is oversold. So the first thing you can use this for is if a market's too heated, it's too overbought, you might expect a pullback. Now, nothing is very accurate with meme coins, so don't expect this to be either. But otherwise, when things are going up or down in meme coins, it's very, very hard, apart from the levels and stuff I've shown you already. It's otherwise really hard to pick where there might be a top or a bottom, because you don't know 10 seconds later if somebody's going to buy one of these coins and spend 10,000 if they want to. You have no idea. So it's very, very difficult. But this gives us a little bit of an idea. So this is a bit of a silly collection that I was just watching at the moment, and I did a quick flip in from these lows, only because it was a good setup, which I'll show you at the moment. I'll show you in a minute with RSI. But let me show you another one, GameStop. Here, this is a bigger one. It's a bigger collection, which I've discussed before in this training. And this is, well, it got to about over 80 million. But the reason I'm showing you it here is because it's more useful with the RSI. So if you type in RSI here, Relative Strength Index, and click on it in the Indicators tab, you'll see it on your chart. So you can see here where we went into overbought territory, it actually perfectly coincided with the peak. So that's very useful. And this is on a 5-minute chart, and you can obviously change time frames here. So that's very useful that it picked that up. But you can see here, it kind of picked up that we were overbought a little bit. So we had a bit of a pullback, but we still ran after that. So it's not always accurate, but you can see it picked up this peak as well. So it does help. And then on the lows, if something's oversold, might be a buying opportunity, it does pick on them too. So don't use this as an indicator to buy and sell, but use it as an indicator to give you an idea. If you're looking to hop into the market, are you somewhere in the middle, which is kind of safe? Are you buying when it's already overheated? Or are you buying when it's actually been destroyed a little bit, which is what you want. When you're buying a dip, you want it to be dipping on the momentum as well. that kind of helps you with your decision, along with obviously the volume and the structural trend lines we've talked about before. But let me show you how it was useful in this trade. There's something called momentum divergence. Again, don't lose sleep over stuff like this. This is quite advanced, but it's a good little trick that I wanted to show you. So when things are getting panic sold off, remember I talk about the panic dip strategy, which you'll see in the playbook. Things are going down, but how do you know how far they're going to go down before we get a little bit of a reversal, a bit of a flip that we could trade into? So every peak that goes down, what you usually see with RSI, you can see at the bottom, the peaks get lower and lower. So this peak, and this peak. So we've seen it get it lower, lower, lower on the momentum. But then this low was the same, if not lower on the chart. It was actually a lower price. And I got in just after this. But notice on the momentum was going the other way. So it's the opposite. So the price is going down, but momentum, MOM, is going up. This is divergence. It suggests there might be a change in trend. So that's why I jumped in. And it was a nice little trade. I didn't get a maximum 2x, nowhere near. I probably got like a 0.5x or something. But it's still a nice little trade there. And that's because I watched the RSI to try and time my entry. The other way you could do it is, as I show in the panic dip strategy, just wait for price to kind of go sideways, which it was doing there. And you're never going to get 100% right. People can sell off after that too. Just because the RSI is changing doesn't mean anything. It just increases our probability a little bit that it might be going in our direction. Let me show you something else interesting. By the way, this is on a 1 second chart. If we go on a 1 minute chart, the RSI barely exists on it. So we have to rely on a 1 second chart. And the RSI is very noisy on a 1 second chart. So it's not that reliable. So just, like I said, just keep that in mind. Anyway, we're going up and we're getting higher and higher and higher peaks. But notice on the momentum, we're getting lower and lower and lower. This warned me here that actually we might be out of steam. We're already pushing too far, too fast. Now, this could easily pull back and then shoot off to 300. I don't know that for sure. But I was considering slowly selling my position here, which I did. And because it kind of pulled back quite quickly, that's why I didn't really make that much profit on this trade. It was still all right trade, but it wasn't amazing. But you never know which ones are going to run higher, because obviously the high here was all the way at 400-500. So if we got a bit more momentum and a bit more buying pressure, it could have done a lot better. But anyway, now it's selling off. And by the way, when markets are trending very clearly downwards or very clearly upwards, momentum indicators like the RSI, like this one below, very useful. But when markets are going sideways and choppy and doing nothing, these are not useful at all. So completely ignore them. You're only using them when, let's say, you're in really good trade and it's going up high and you're like, might be a good time to sell. Well, have a quick look at the RSI. If that's confirming that, yeah, actually it is getting a little bit heated, then yeah, probably consider that. Let's go into a 15-minute chart, because on these longer time frames, you can go on wider charts and then you get less signals, which sometimes helps. You can see here, by the way, we were very overbought at 20 million, but it wasn't a good signal. Yes, we got a bit of a pullback to 18, but then we carried pushing on. So you have to be very, very careful with this. Like I said, it's not always going to be accurate, but it gives you an idea of where you might be in the market. Like if you're selling at a time when the RSI is kind of heated, that's probably a better time to sell. Notice, by the way, in this particular one, the RSI getting below the middle line now and staying there is not a good sign for GameStop, by the way. You kind of want it in the upper half. You can see here, all the way from when it was, 5 million? It was always in the upper half. This is another trick with the RSI as well. The collections that tend to be a little bit more pumpy, they kind of stay in that region and they don't stay in the lower region too long. If this stays in the lower region going forward, we might still be getting more dip, which we obviously don't want to see if you're a GameStop investor. But I'm personally not in this anymore. I may buy in, if I get a good opportunity. But that's it. So that's the RSI. So you can add it as an extra tool in your arsenal. And like I said, it's sometimes useful. Unfortunately, with meme coins, there isn't much else in terms of all of these different indicators. None of them, I've been through all of them, and I use a lot of indicators generally. Well, I don't use a lot now, but I have used a lot in the past. So I really do know what's useful and what's not. And unfortunately, a lot of the others aren't. So I wouldn't waste time with those. At the end of the day, you mainly want to watch price action with the naked eye and make decisions and use your instinct as you get more experience. These are just tools that help increase our probability. That's all. Thanks for listening. In this video, I'm going to talk about another example, and this is, let's call it the sideways scenario. Very, very common in meme coins. So you bought a position, it went up a bit, down a bit, and now it's kind of sideways. You are roughly the price is around where you bought it. And nothing interesting is going on, or you might be in a bit of profit, or you might be holding a small loss, and you're wondering what to do. It's been more than a few minutes, it's been hours now, maybe even it's been a day or two, and you really don't know what to do. So this is an example. This is called Dog Vision Pro, and it's a random meme coin that was just trending recently because Apple released some Vision Pro goggles. And it's doing okay. So it had a really good bounce here. I was actually watching it here at the initial part, but annoyingly, I didn't get involved. But I mean, how could you know? Because here, it just looked dead for a day. And then suddenly volume comes in, as you know. We've talked about this before. So let me just hide this sidebar so you can see the chart clearly. Volume came in, and then it was looking really good. And I got into it, and it went up a little bit and then back down. And I was kind of break even, and I was wondering what to do. And the answer is I got out. And I'll show you exactly why. This is going to be your default. So we talked in a previous video about a double top, but I said sometimes almost you can get a triple top as well. But basically, price is pumping here up. So this is step one. Step one is price is pumping. So you get in because you think, price is going up, everything is looking good. But then step two, what happens is it hits a roadblock. And this one hit a roadblock at 1.8 mil in market cap. Fine. We're at step two. We hit a roadblock. We pull back and then we try again. We double top at the same level. No problem. Step back, try again. And I was convinced this time it would probably break through. But remember, I can't control how well this collection will do or not. I can just trade what I see on the charts. That's it. Triple top. So it was knocking on the door and the person behind the door said, no, you can't get in today. Go home. So literally the pump has gone now. And then what's happening all the while from here, here, here? What are you seeing? Volume down, 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 down. And what have I told you many times in this training? The volume goes down, usually with meme coins, the interest drops and then the price drops as well. And then what do we see? Price going down gradually. And I'm out of this position. And I actually had to take a small loss on this position because I wasn't sure if it was going to pump again. And then it's hard because when you're at this region, so when you're around the kind of, I bought in probably around 1.2 average, shall we say, because as I've shown you, you don't just buy in one big go, you buy in small steps. And I was holding profit, good profits, but I wanted to give it time because remember, if it breaks through here, if it does, the move can be quite violent upwards. And suddenly from 2 mil, you can go to 5 mil and 10 mil, as I've shown you with like GameStop and other coins. So you don't know. So you want to be a little bit patient and you have to be prepared to obviously take small losses in this game because it's risk reward. You never know what's going to happen. But anyway, it was pulling the back and then I was like, this is not looking good because the volume was dropping. The price kept struggling. And then what do we see? Ladders going down, downtrend. Again, we're just tying up stuff we've been learning in this training. As soon as you see the downtrend, you just need to get out. So step 3, out. You need to get out. Now, you could be wrong and it could pump up after that. Or you could be right and it could dip below. Doesn't matter. The best choice is always to get out. If the chart is not doing what you need it to do and time is passing, that's not good. With meme coins, how many times have I shown you on my videos, everything is up and down. And the time frame is either a minute, 5 minutes, an hour, 3 hours to get to that top, 1 day, 2 days, something like that. But then afterwards, it's always down. It's very rare you get it going up a little bit, staying at the same place, and then just staying sideways for like a month. It's very rare, unless it is around the lows where it's already a dead coin anyway. And it's very rare it goes down and then just stays sideways and then suddenly bursts into energy. Now, this collection could get a really big mention from like Elon Musk or something, I don't know, and then suddenly, yeah, of course it will pump up. But the probability of that happening and when that can happen, probability is very low. And also you'll have no idea when. So your money is tied up in this collection. Just leave, take a small loss or a small win and go in the next collection, because in the next one, you'll get this same setup, but then within an hour, it's already at 5 million and it won't take hours or days. So just be very, very careful with it going sideways. And my next warning is, like I said, with a lot of these short-term ones, you need to be watching the charts live. if you have to go to sleep for 6 to 8 hours, be very careful holding positions, because even these newer ones that are at 3-4 mil, I see many 3-4 mil market cap coins turn into 200,000 market cap within hours. Because once selling starts and the stairs go down, everybody panics and gets out. So unless there's new interest and real longevity with that meme coin, it's not going to go well. So you don't want to be asleep for 6 to 8 hours not watching the price. Unless, like I said, it's a very established coin. It's a wave 2, wave 3 move. And you know what you're doing in terms of, you know that you're already in profit and the move is still going up and it's just taking its time, and the stairs is got a nice stairway move up. Then fine, yeah, go to sleep and hopefully you wake up and it's even higher. That's fine. But in these other collections where your break even is going sideways, it's about breakout and you don't know if it's going to break out. Remember, everybody else is watching that as well. So if it doesn't break out, so you put a cross through that, well, it's only going to break down. That's the only other way it goes. Meme coins rarely at high levels stay sideways. They're always trending up or down, up or down. When they completely die off at the bottom, then you might see it sideline sideways, but that doesn't mean anything. Like here, when the coin was completely dead. And by the way, this is rare that a coin suddenly comes to life after being dead. But remember, this is the Apple Vision Pro. It's very trending. It's very in the news. So kind of not surprised. But when it's dead like this at 13,000, that's not any good time to do anything. That coin is dead. And this coin was revived either because of the general fact that it's a Vision Pro and it's trending at the moment, or they did some massive marketing, or some new buyer came in, or a community takeover. Something big happened here. Don't care what it is. Whatever it is, something happened. Otherwise, this was pretty much a dead coin, and this was just a normal wave one as we've seen before. And it did all right. It got to like 200,000. I wasn't involved here, but I mean, buying at like 2,000-3,000 market cap to 200,000, that was actually a much better move than anything's happening at the moment anyway. So, again, in summary, if it's going sideways, be very cautious and consider just getting out and moving on. Thanks for listening. This is just a very quick video, and I've titled this Round Numbers because I want to show you some of the most common ones I see. Now, we've talked about this throughout this training program, but let me just show you quickly here. I've been watching GameStop, obviously, very, very closely, and you can see here on this particular wick, we hit 100.2, so literally exactly 100 million. We just touched it, and then what did price do immediately after? Fell all the way back down to 67, so literally fell a third, so like 33% from that high. Round numbers mean a lot when it comes to trading meme coins, and especially early on as well. So obviously we're getting them here later on, but let me show you some collections where early on we saw some significant ones. This is just a random collection I was watching earlier. It was called Cartman. Now, when you're doing that panic dip strategy, it doesn't always work out and we don't always get massive runs. We have to see how the setup is. But notice that a lot of the time, if the market cap started somewhere and it was pumping 20, 30, 40,000, whatever, I see all the time it dropped to nearly exactly 10,000. And we always seem to get some sort of bounce from 10,000. I've seen that again and again. Look at this. This is just another random one I saw earlier. Look where it bounced here. Exactly 10,000. Didn't go very far this time. Went to 23 and then it died off after that. But it's round number. Especially the ones I see, especially in these collections are 10K market cap, 50K. See all the time 50K. And obviously you've got your hundreds, 250, 500s, and then a million. So you've got the obvious ones as well. But 10K and 50K in the early ones, they honestly tend to be magnets. Let me just see. I've got some random pages open. Let me see if I can find any others. Here you go. Look at that. Literally a stone throw away from 50,000 exactly. And that was the top for this particular collection. May go back up there, may not. Who knows? Literally 50,000. But remember, because you know it's 50, you're not selling at 50. You're taking some profits before. Always before. Your transaction might not go through. People sell very quickly. You want to make sure 40, 43, 44, something like that, you're taking profits. You don't need to get it perfect or exact. You're taking some profits. Then we may break through. We may not, obviously, as you know. So that's a couple of examples, well, a few examples right there of the most important round numbers. So as you're going through looking for new collections and setting up your trades as well, just always keep them in your back of your mind. It doesn't mean ever that they're exactly going to go there. And remember, we talk about previous support and resistance levels as well, which are obviously important for that particular collection. If that particular collection had a high of 30,000 and then came down and is building back up again, Where that high is, you want to sell just before that. That's a level in itself, that previous high as well. So don't forget that one as well. Thanks for listening. So in this video, we're going to talk about another technical setup. Basically, it's a wave structure setup that we see, well, I see all the time when it comes to trading meme coins. We talked about double tops a lot, but these are double bottoms. And they're not technically double bottoms because they're not right at the lows, but I see it all the time. And it's very difficult with meme coins to get accurate support and resistance levels because they don't respect because they don't really respect classic support and resistance. These are fast-moving markets with little liquidity. However, I do see in a new move these setups sometimes. For example, I see when we move up and then we get a pullback. Notice here with this particular collection how we hit the same level. So we're coming back down and we hit 400 and then we go up and then we go down, we hit 400 again and then we rally from there. This has now become a support level, classic support. But if you look left in the chart, it was never previously much of a level. So you can't see it here. So you're not going to draw your lines as you might do with classical chart. You just need to appreciate when, so for example, we've got a potential stair developing here. So we've got a higher low here. So that's really good. So you're probably thinking, times to get in. We try and move and then it could have sold off. But it's very bullish if it holds that level and then moves. So usually there's 2 touches. Sometimes you'll get 3, but that's rarer. The same way, double top, for example, I think if we get to that all-time highs here, if it kept moving, for example, we would get a double top and we'd get a sell-off for sure. Sometimes you get 3 touches, but more often than not, it's 2. And I see this all the time in charts. So let's just click on some random charts here. So you see this is moving up and then pulling back. And then we get to this level and then weak push up and then it touches the same level again. So that could be an entry point here and your stop would just be below, like psychological stop. What I mean by psychological stop is, well, if it doesn't hold that level, then quickly just sell here. But then we get a nice push up from there. And you'll see this double pattern again and again in the chart. So for example, this is pulled back here to trend line support. If we get a bounce and it pushes up and it's weak, and we touch the same level again, so a double, it may just take off from here, we don't know. But if you see the double setup, sometimes it can be very powerful support. So like I said, see it again and again in charts. You see it here, look, touches here, double here, and then move up. Look at this one here, 2 double taps here as well. So you want to see it generally on the way up, but sometimes you can see it on the way down, act as support as well. Again, it's not like a guaranteed 100% every single time it's going to work that way, but it can happen. Let me just see if I can see it in any other charts. I'm just going to have a look in this one as well. So not as clear with this one. This is kind of all over the place. But again, you're seeing support respected here a couple of times. This one, not great. You see it just breaks below a little bit. But keep an eye out for that. As you're seeing it move up and you're not sure if when they're selling, it's going to fully sell off. Well, just the first low it came to, just see if it pushes and then just stays above that low. And that second one could be an entry point. So if you're seeing it pulling back and you're like, I don't want to get in yet, let it go up, pull back. You get a better entry anyway because as it starts moving up, your entry is worse. You're paying more. See if it does that double tap and then move on. So this double tap method, I've been using recently and it's been really good. It's been a lot more reliable than some others, like trend line supports and stuff like that. Trend line breakouts definitely work, but trend line support or classic support where I look at the previous resistance level and see if it acts as support, it doesn't work with meme coins. I've back tested it. Back test means when you look through hundreds of charts and you see if the same move is replicated in those. I don't really see it. Notice this one's interesting. So we had a big pullback here and then we pushed up, we struggled. That's a double tap. So you could have bought in here and then sold for nearly 2x. But notice we then come back down and we get a triple tap, which is actually more powerful because if we get support 3 times, then that means this level is very, very strong. And then that run was very, very healthy. It went all the way up to 1 million. So it's a 3x. So keep an eye out for those levels. Now on the way back down, we slightly respected that level. But like I said, meme coins are not classic. So nobody looks at the previous levels with these. But in real time, they will look and see if that level's been supported. But it's interesting that it bounced at the same time. When these collections, by the way, they get into wave 3 and they get a lot bigger, then some of our classic technical analysis does work. For example, GameStop or Dog with Hat, stuff like that. Some of it does work a little bit better, but the best opportunities aren't with wave 3s because they move too slow, and 40 million to 41 million market cap is nothing on your position. It's not even barely even helping you. So you want to stick with wave 1, wave 2 generally anyway. But I hope this helps. Thanks for listening. In this video, we're going to expand on Fibonacci sequences, and we're going to have a think about pullbacks. And this is another very, very difficult topic when it comes to crypto, is how far can things run? Sometimes things just run and run and run. And I'm going to talk about Dog with Hat as well, which is another one where the price just kept going up. So how do you know if any pullback will push on to new highs, or if that's the top? How do you know if we've already reached the top? Remember, anything I discuss here, it's not guaranteed, not 100%, but definitely Fibonacci levels we see again and again in any type of market, especially with cryptocurrency as well. So I'm going to show you a way you can do that. And then we're going to discuss a couple of collections right now and how we would approach them using the same kind of technique, because these are collections that reached more than 1 million. Well, this one touched nearly 1 million. So, you know, how do we know? Is this going to run to 10 million, 20 million? How do we know? Let's have a look back at some of the big collections. So this is GameStop. And I talk about this in the DGEM Playbook guide. And this is one I traded and it did really well. Notice, first of all, the absolute top was exactly 100 million. Can you believe that? Like exactly to the second decimal point. No coincidence, no surprise. Like these are common levels that are magnets for these types of markets. Now, when you were first in this, and when I was first in this, and I was watching this, how do I know any of these pullbacks? For example, from here to here, how do I know if this pullback means we've already reached a top at 35 million? Well, the way I do it is Fibonacci, which we've discussed before on the training. But how you do it from here is each leg up from swing low to swing high, what you can do is you can do a new Fibonacci trace from swing low to swing high. And then you want to look at the 50% level, but most importantly, the 618. The 618 is the golden zone, one of the most common levels for pullbacks in any market. And then if we do bounce anywhere near there and we push on, it's possible that 618 will lead to further highs. So you could potentially take a trade. And what I've started to do is if it falls through the 618, then I'm going to assume the collection's dead. Now, it won't happen every single time, but I think 9 out of 10 times the collection will die if they've passed through that. So let's use some examples. So I'd click on these 4 lines here on the left, and it's the fib retracement tool. So it's the top one anyway. And then if you drag it from the swing low and then put the top line, the 0 line, over the swing high, you can see this one hit the 0.5 perfectly, literally to the tick. So it's the 0.5 and the 618 level that I'm looking at. So fine. So we retraced to there, hit that well. That potentially could have been an entry point, and then you run on forward. Good. So now we run, price runs and runs and runs, and hits another high at 84. And then I'm doing the same technique, but this time it is less reliable because from here the pullback was a little bit lower. But the other kind of retracement level you can check is, especially when you're working out the initial move, you check from the 0 level to see where the pullback is, from 0 all the way to the top, if it's a bigger retracement of that entire move. So that's another way you can check it. But now when we got to 100, if we take it from the swing low to the high, we've already broken through that. So we're already retracing. But if you take it from the 0 level, as close as you can get, because it's very hard to mark the exact 0. So anywhere around here, minus 52,000, that's fine. And you go all the way to the top, you can see that we well passed through the 618 level. We did actually bounce there a little bit. So on a larger correction, if we got a bit of a bounce here and we started moving up in a stair-like fashion, then you could say, yes, we may be going to another 300 million. But when I show you Dog with Hat in a minute, you'll see that once it starts pushing up to higher levels, the pullbacks are always kind of shallow. They're never that big. So let me show you an example. This is Dog with Hat. Let's go right to the beginning and the initial moves. So initially, you can see here, all the way back here, it did a few deeper retracements, but it's the same kind of concept we're using. So initially here, we don't know if 12.5 is the top. And I generally tend to do, like I said, the 618 level, but it's not perfect. Sometimes price might break through a little bit more, but generally around the 618 level, I'm hoping for a bounce. This actually broke a little bit more, so I personally might not have traded this. You can see there was support there, then we broke. But then if you see a break above the 618 quickly and aggressively, then obviously you can consider taking a position. And these are unique collections we're talking about here. These are not like the normal ones you might see. But anyway, let's go from swing low here on 13th of December to the 90 million mark. Let's see what the pullback was like there. Notice quite nicely bounce on the 618 with a tiny wick lower. Good support on the 618, and then we moved up. So we're moving up now in the next leg. So the next swing high is this point here. And then from that point there, 29 million, we went all the way up to 200 million. Crazy run. And then we had a pullback as well. And let's see what this one's like. So swing low to swing high. Notice we bounced on the 0.5 to 0.618 around that region, and then we pushed up again. So we could just repeat this again and again. And then, to be honest, here, most people, including myself, would completely... it doesn't matter then what the retracement is. We've pushed up too far for a meme coin. Like 300 million is already a massive amount. But this correction is now correcting the entire move. So here you don't do the fib from the last leg. You might do it, because we've had kind of like 5 waves up. You might do it from 0 level again. So let's just find a rough 0 level. Like I said, this is not perfect. It's just to give you an idea. And notice we were supporting on the 618 a lot. Supporting. And then we actually did break through, and then we pushed up for one more leg. But you don't want to get involved there. You don't want to be buying at 300 million to make like a less than 2x flip, a much less than 2x flip at such a big market cap coin that takes forever to move. You don't want to be doing that. So, like I said, the collection's holding strong, and these are bigger corrections along the way, but you're only concerned with the initial ones. These initial first ones, like for example, if you got in here at 30 and it goes to 300, that's 10x. Or if you got in here at 1 and 1 went to 80, that's 80x. You know what I mean? So that's where the multiples are. Further down the line, the multiples are not that good. This is Kok Inu. Another one I traded that did really well. This is on AVAX. And this initially got to a massive market cap, 48. So again, most people thinking, well, that's probably the top, because most meme coins will crash. And absolutely, I talk about that more than anybody. But is there any chance of these original one-off coins doing more? Let's try and find as close as we can to 0 level. Now you can actually expand the chart up to make it a little bit easier. So as close as we can to 0. So I'm just reading off the figures there. So probably here, about 11,000 market cap. That's as close as we can get. And then go right up to the top wick. So you can count the wick here if you want, the top of the levels, or you can do right to the top level. It doesn't really matter. But you can notice that it's the 0.618 level, the golden zone, which we bounced off very nicely. So if you see price messing about here and then pushing up, and on a smaller time frame, this is a 4-hour time frame. On a smaller time frame, you'll see nice stairs here. And then, yeah, you can trade it. And then this was going from 15, and then how far did we go on that? Literally one run up. This entire move was all the way to 298, 300 million. This was a crazy move, crazy 10x, nearly 15x move. And I figured that the very likely top was there. I had a look to see if there were some bounces. I was involved in this bounce as well. And then I was convinced it was dead. But actually, if you look back at the collection, you'll see that it went too deep. Now, over a long enough time frame and lots of correction, maybe it'll pick back up. Who knows? But it doesn't matter. We don't want to be involved in that. So if you actually have a look in terms of the Fibonacci here. So let's just have a look at this. So from swing low to swing high, again, these are not perfect, but literally there is no other way. Like otherwise you'll just randomly be saying, oh, I think that's the high, I think that's the low. That's not going to work. Notice 618, perfect bounce there. Perfect bounce. And what do you remember about Dog with Hat? It came to the 618 and then it went down, pulled back, and then it started breaking out, and then off and go. We were running. This did not do that. It failed. And because it failed through the 618, you could say basically here that the collection's done. You could say that. And when you look left for many, many weeks, almost months after, it's doing literally nothing. Now it's getting support at this lower level. And who knows, with time, it might actually start picking up and moving up, because it's done a very nice bounce from here, nearly a 2x. Who knows? But basically, in terms of that immediate move that we care about, the one that gets all the ROI and is faster as well, only takes a few days to get to 300-400 million market cap, that's done. So let's have a look at a couple of new collections. We've discussed a couple of older ones, classic ones. So this is something called the Fed. It's just a random collection that's launched, and you can see it was getting to 1 million. But the level that you want it to bounce out, especially from 0 to 1 million, so let me just show you here. So roughly, if you take the peaks there, roughly the 0.5 level where we were seeing some bouncing and then it failed, and then the 0.618 where we saw that initial bounce, but then it never broke new highs, and then it failed. And you will know from my videos, if it goes to the 618 and then it pushes up, it needs to break all-time highs. We don't want it to hit a double top. It hit a double top. Even worse, it hit a triple top. Very, very strong topping sign, which means literally here was a very, very clear ceiling that it was never going to go over. And it only ever wicked up to there. The real highs were about here. So from there, we just kept dying down in terms of price. Now we're all the way down at 84, which is way, way below the 618 level. So that's it. That's the collection done and over with. If you look at Saitama, this one ran a little bit higher to almost 4 million. Let's have a look at the move. So again, we're going from 0 here, because this is all pretty much one move, but we can go to this high here, which was the 3 million. So let's try and find 0 level as close as we can. And let's go to this 3 million level. Where did we hit? Look at that. 0.5, double tap. That's another strategy I talk about in one of the videos, double tap. We tapped it twice, and then from there we pushed up. We didn't do great, 1.5, but that's still a 2x, more than a 2x. Went all the way up to nearly 4 million. And we touched that level. And then we bounced back. And we got some support at the 38.2, which doesn't matter too much. It's more the 0.5, 0.61. In this, we need to see some bouncing. We've pushed further down. Now, technically, the 786 is a level as well, so it's one to keep an eye on. It's a deeper level. But really, if it hasn't bounced at the 0.5 or 0.618, with the way meme coins are, especially in the early stages, where all the pump and interest is, it's very likely going to die off, and that's the end of that collection. And we can say, here's the top. Put the T there, and we're done. So always look for the 618 level in a lot of these meme coins. That's one of the best ways I found to say this is a top. You should be taking profit anyway. But if you're not involved in the collection and you're thinking, all right, let's do a pullback, 618 is a very good retracement. It's a deep retracement. So you're getting a massive discount because this was 4 million. And if it bounced at 618, you're buying it for 1 million. So you don't need to have FOMO. And you don't need to be upset that you missed all of the run because you're buying at 1 million. So if it runs to new highs of 10 million there, you're still doing a 10x in an already established collection, and you have much time to get in, so you can take your time. So Fibonacci, very powerful. Literally nobody in meme coins is doing stuff like this and using fib levels like this. So you'll be one of the very, very few people who are analyzing to this level, but it makes all the difference because you just need a couple of 5x or a couple of 10x trades to blow up your account. Thanks for listening.